All right.
Look at that. We're live.
Beautiful.
Great stories.
Happy morning.
Yeah. Great morning. We talk about roundabouts, all kinds of fun stuff. I don't even know where to begin after this.
We have some coming. Well, let's dig right into it. We want to get into pre-approvals today.
Yeah, the roundabout way of the pre-approval. There we go. We can tie it all together.
So, roundabouts, there's things that go through the intersection that people really don't like because they're not expecting them.
It's like they're slowly moving from like the East Coast to the Midwest, I think.
They work great if they make them wide enough. We actually have one in Cedar Lake. The one in Cedar Lake, the big debate was people were pissed off about it and they were saying we couldn't get a fire truck through there. So the Cedar Lake Fire Department went out there and was like, look, it works. It is rather tight. If you make them wide enough, I'm a big fan.
Also, mark them clearly. Don't let them creep up on you as a surprise
ahead of time, because some people don't realize they're there. Just think they're going to go straight.
It's happened to some people in Wisconsin. It's happened to me one time in Indiana. So it is what it is. But at the end of the day, do you want your process? Do you want your home buying process to be a roundabout where you just can never get off to the right lane and make the right exit, or do you actually want to be able to get off on the right exit and get into home ownership, right? So you and I, Tony, were talking earlier before we got on about this two schools of thought here when you're working with a buyer's agent, right? Or how buyer's agents are trained and what they're working through. Either hey, Tony, I'd like to buy a house. Okay, great. Let's get through the pre-approval process. Let's talk about finances, make sure your budget's in line. Or hey, let's have a no strings attached first date.
Yeah. And in my opinion, so the two schools of thought are, like you said, one, and this is strictly from a sales perspective, what they're teaching realtors. The reason that we have the problem with running into buyers thinking that it's okay to not be pre-approved is there's obviously got to be agents out there that are willing to do something with them before they're pre-approved. And the frustrating part to me is I know that there are coaches, real estate sales coaches in the business who are coaching agents just get that guy in the door, because they know that sometimes having the conversation about a pre-approval creates some pushback about a guy who just wanted to see the house. Hey, listen, I just want to see it and then I'll get pre-approved if I like it. All right. So there is one school of thought now teaching agents, just get that guy in the door, build rapport. Now, for you as buyers, prospective consumers, think about that. They're not actually thinking about selling you any kind of house. They're just thinking about securing you as a relationship, as a sale. All right. You are being manipulated.
It's a car dealership. Hey, if I can just get you into this car, right?
Exactly. Now, I think the vast majority of us probably aren't, I don't want to say at that level, but probably don't think about our client us relationship in that way. We probably think of it more as we want to do right by you, and we want to also be willing to commit our time and effort to serving you wholeheartedly. When we start working with you, we're all in on working with you, not necessarily trying to sell you something, manipulating you into something, act as a true agent. And the first part, when we start talking about these things, is the money. All right. Like, what's the movie with Tom Cruise?
Show me the money.
Show me the money.
Come on, Jerry, show me the money.
Yeah, exactly. And I'm kind of like, when I talk to people on the phone, they call, I'm just waiting. They're telling you all this stuff about this house, what they want, what they whatever. None of that matters until we know what you can spend, not what you told us, right? Because if what you told us was fine, there'd be no reason for any contracts. The bank would just give you any amount of money because you could just say whatever, all right? And they're like, oh, I'm honest. Well, look, I'm Ronald Reagan. Trust but verify.
There we go.
All right. So, and the thing that I find funny is, I don't know, you probably get it when they call you, is that people start pontificating about all of these things. Well, it's got to have this, that, and the house and blah, 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 in different scenarios. And you're like, we don't even know what you can spend.
I haven't even got your last name yet. That's, and yeah, the whole, I don't know what we can spend, but I need to be in this area. Well, why is my payment like that? Well, I've done a lot of transactions in that particular area. I know what the real estate taxes are. I know what relatively what your homeowner's insurance is going to be. And if you're putting down less than 5%, I can tell you a great rule of thumb. I call it Tony's mortgage abacus of here's your monthly payment, right? If you're putting, like, for instance, Kankakee County, we're typically the number 1 or number 2 mortgage originator in that county every month. If you're putting less than 5% down in Kankakee County, I can tell you with near certainty that your mortgage payment is going to be 1% of the purchase price.
Okay.
So, well, why is 300,000? So my payment's going to be about $3,000. Yeah, if you're buying 300,000 in Mantino, payment's probably going to be around $3,000 with tax. Like, that's taxes, insurance, PMI, the whole thing. And then it's like, well, let's scale it back now. Now, all of a sudden, right, they come out with these great ideas. Oh, we want this, we want this. Well, they're already taking things back, trying to now get under a particular payment threshold. It's like, well, we don't even know if you're going to qualify for that payment threshold. Let's talk about what you're doing for, like, what you do for a living. Talk through income, talk through budget. What do you have for down payment? Versus let's go see a house, get the emotions all really ramped up, and then possibly have to give you a swift kick below the belt and say, hey, we're not ready to buy.
Well, and two, on my end, all right, like I tell people all the time, even if it's a cash buyer, all right, and even if it's somebody that I'm relatively certain, very certain has the cash, all right, I require possessing the bank statement with their name on it or the proof of funds in some form with their name on it before we go. And here's why. Tyler and I talk about this often. A lot of realtors, or a lot of the consumers certainly, and a lot of realtors don't really understand how much speed is a key in being successful. All right. And what I mean by that is whether the property just came on the market or the property's been on the market for 3 weeks. Okay. When we think we want to do something and the property is available, we need to be able to do it right now. If you like that property, I want to be able to stop afterwards right in my car and flip open my laptop, pull the comps so we know that we're at, discuss what the offer should be, and start drafting it and be ready to send it from the driveway. Because we don't know when the next a half hour, 5 minutes makes a difference sometime. If you get them moving forward with you, another offer can come from the side. Maybe they didn't even see it in their email until we already have ours accepted. It can be that way, whether it's, because I tell the guy, if it's 3 weeks on the market, you're like, well, we've got time. Maybe there's another guy doing the exact same thing we are right now. And if his goes in a half hour before us, so we want to be able to execute quickly. In 20 years in the business, I've seen enough transactions where I've seen the time from seeing the property to, even though you can do a pre-approval, a full one pretty quickly, it's not going to be 5 minutes. And in the time from I'm interested, let's do it, to knowing what we can actually do, because I'm going to need that for our offer to carry any weight, the property's gone. So we just wasted our time, got your emotions up, wasted your gas, everything.
It's wild. So perfect example of this, right? Going to the holiday weekend and why a pre-approval is important and working with a local place. We're going to, toot my company's own horn, right? One of my LOs, right, has an agent he works with a lot out here. The agent calls him and goes, hey, we have a pre-approval from Novus. Can you just check to verify that this thing's solid? Because we have another offer that's higher, but they didn't include any pre-approval letter or anything.
Right. The other thing is too, though, is with the pre-approval, you get guys like me. Like yesterday morning, I was vetting multiple offers on a new listing that I had. I had 7 that I had to vet. One was cash, so that was pretty easy. The guy had a proof of funds. But these letters, they're not all built the same, and they're not all coming from somebody else. So it's not even just getting that letter. You have to think as a buyer, you have to put your seller's agent hat on as a buyer and realize that that guy's looking at other people other than just you. Okay. If there's multiple offers, you want to know. The thing is too, is with the agents that are willing to take somebody out, this dating thing, without a pre-approval. If you're a buyer and you're like, kid, I don't have to talk to these guys, I can find one of those guys. Think about how terrible they must be that their business is so slow that they're willing to put people in their car or meet with people on a Saturday or in an evening that they don't even know can buy the house for certain, just because they want to try to build a relationship to hopefully secure you into this thing, right? That seems like a guy who's probably either not the brightest or time isn't worth that much money. So if their time isn't worth that much money, they're going to be helping you spend the most amount you've ever spent. Is that someone that you want guiding you? I wouldn't want that person guiding me.
I would want, if I'm a buyer, and I'm different. I guess I'm wired differently than most people, but I want someone with a plan and a process before I'm cutting or borrowing six figures at any point. If the plan is to get me in and talk to me, to desk me like they do at car dealerships. Oh, look at this. Oh, yeah, we'll send it out to the used car manager to go check the value on your trade and then sweat it out to build a rapport, which is really mind manipulation. I don't think I'm really interested in that on a $500,000, $600,000 transaction by any means. I'd rather have, hey, we need to make sure we got our financing in order so we find that right house. We have a chance
now
because they're going.
Yeah, absolutely.
But you know where, though, I think we align, and probably, but it's important to recognize that there's some people that want to have that used car dealership experience. To them, making any big transaction has to feel like that. They feel like they can get one over on kind of everybody, and they want to play the game. And I see this in some of our higher net worth folks. It's fine if that's you. You're not my client. Like, I'm happy to give you a referral to a bunch of shady agents who are happy to play that way. Like, and I get it because it says that you're kind of shady too. So like, I'm cool with that. I get it. You're you do you, and you're just not my client. All right. We want to represent people as strongly as possible and be fully committed and, hardcore representation. And we just can't do that with the slickster type of guy.
And I think that we're going to start to really see that deviate here coming into July, August, as both Indiana and Illinois start to move through with the buyer representation agreement. So now it's, hey, let's date, but also, hey, sign this agreement real quick, right?
Yeah. And myself and Tyler, we're definitely going to be toughening up the standards of who we'll take on as a client. I get it that a consumer oftentimes will have a tendency to think like these realtors, I can just grab any realtor, any one of them would be glad to work with me. I don't know. I think that's going to change for the good agents. I mean, I'm not going to sacrifice myself into enslavement of getting paid nothing and working for somebody I don't really know for certain that they can transact. Now, if you're in that position, we know how the process works. If you want full on hardcore representation and you're willing to go through the process like you should, then we will be right there for you.
And I think that's what buyers seem to have this perspective, right? I think that, and sellers too, right? There's always this toggle of it's a buyer's market or a seller's market. I think right now it's probably leaning a little bit seller side, but a strong buyer still with a plan, a strong pre-approval letter, a process, and hardcore representation, they're getting offers accepted.
Yeah, I mean,
but it's a plan and a process.
We get them accepted actually quite often when we really shouldn't. For a couple things. And what I mean by shouldn't is somebody with probably similar or actually superior qualifying criteria as a competing buyer, all right, with an offer that's maybe equal or more. And how do we get those accepted for less than our competition quickly? It's a lot of things. It's like, why is the football team good? Well, if the football team just has an excellent quarterback, it doesn't matter if he's got no O-line in front of him, right? If they just fall down, the guy can be the world's greatest. Okay. So it's a lot of things, but for us, one of the big things is you're right. In Northwest Indiana, South suburbs, Southwest, and pretty far actually west, the Perry name, Novus, the agents know that. it's also how we present them. All right. And that has a lot to do with the way that the offer is conveyed and drawn up. It also has a lot to do with the way your pre-approval is written. It's very clear that everything was checked. There's different levels. I'm surprised there's still some. We just saw it the other week with these people that are referred to you by Chase. They didn't actually bring in all of the documentation and look at them with a tight eye.
It was crazy. I think when they came over, I think they said they were pre-qualified for like 245 conventional. These people, unfortunately, they have $48 in the bank, and they're both tipped income. Like, you guys didn't give them W-2s or pay stuff. Like, it's a very easy calculation to calculate tipped income if you know what you're doing. Like, oh no, they didn't have them. All right, well, good luck shopping with that thing, because we are not even close on there. And again, it's just the process, right? But we took the time to get the paperwork and have the conversation of, you know what, now probably isn't the right time. Let's take a couple steps back, get you in proper order so that you can buy a good house, not just buy a house.
Right.
And I think that's something that happens a lot of times with these slicksters to get in the door conversation is, I'm going to sell you any house versus I'm going to sell you the right house.
Yeah, as a matter of fact, we just had one. It was over the weekend, and it was an agent. It's a big team, and they're notorious for that. What's funny is I recognize the agent's name. They're notorious for working with mortgage brokers, mortgage lenders who just do the pickle on the wall. Throw it against the wall and see if it sticks. Right?
We're kid friendly these days. We're no more hurling shit at the wall.
Yeah. And there's certain, unfortunately, it seems like there's certain demographics that these agents prey on. One that I'm sorry, I feel like they prey on the Hispanic community because there is that language barrier. And sure enough, you know what? I looked up the team leader's name. I just did a global search on my email, and I had properties going back to 2017. All right. In which we had accepted offers, but had difficulty along the way and had to like cancel it or do something because the financing wasn't fully vetted. All right. So that's, first step is you have to be pre-approved, but this is not contact, rocket ship mortgage or somebody who's going to like take it like a couple bits of information off the phone. Oh, you're good to go. And a little online application, you're done. All right. Because you're going to face agents like me on the house that you love. Maybe I'm the listing agent and I'm going to vet that thing and reach out to the mortgage originator or the lender and ask them some very specific questions about their pre-approval. And when they don't answer them, as I want, as I expect, you're not getting the house.
Yeah. I mean, when you're representing the seller, right, it's price and their net is one thing, but the percentage of success is the key, right? I could have 300,000 coming to me, but if I only got a 5% chance of it coming, what good is it?
Yeah. If
I have 295 coming at a 98% chance of success, I'm going to take the less money and run.
Yeah. And I will say this, definitely for the most part, from everything I've seen, we're still heavily in a seller's market. Even though prices have escalated, there's a lot of markets where there's really only one or two properties on the market in a specific bracket of type of property. All right. And if that thing is priced correctly and it's going to sell, you need everything going for you that you possibly can. You shouldn't even get out to it unless your agent has everything that they need to write the offer from the property. All right.
I had no doubt about it. And I think the other part of that too, like from the seller's perspective, you were saying earlier, hey, if I'm the buyer, put the seller's agent hat on. If I'm a buyer, also put the seller's hat on for a second. If I'm selling my house, do I want to accept an offer from someone that didn't even bother with like turning in pay stubs or W-2s or a bank statement? Do I even want that person in my house, walking around my house, right?
Well, I mean, I think if I was still a managing broker of a shop, and actually if we went the way in which, the DOJ wants us to go, in which realtors are like W-2 and employees, I'd have a rule at my shop that if I caught you taking somebody into somebody else's house that didn't have a full-on, fully vetted pre-approval, you'd be fired. You wouldn't work at my office. Why are you taking somebody like that into somebody else's house or whatever, right? So, and like the trust me people, like, no, it doesn't operate like that with your money. It can operate like that with a whole lot of other things. You know, the other thing is, so the next thing that we're seeing, so pre-approval is huge. There's sort of I'm seeing it with every buyer, so I want to touch on it. There is lack of inventory, and then you'll see one come on, and it is overpriced. All right, it's one of the things that we got to talk people through. I have one over this weekend that would be great for my client. But he's actually a cash buyer, so I really got to watch it for him. At least I feel some obligation to him. He's asking what it's worth, and I know that it's $50,000 overpriced. $50,000 overpriced from the highest property like that. Okay, so we're seeing some difficulties there in that some of the stuff that you're interested in, it's like during the recession, we had what I called imaginary listings. What an imaginary listing was, it was a short sale listing that the agent had no business listing as a short sale and had no path towards ever getting it closed or getting it closed at the price that they had advertised it at. So that's imaginary. Like, it's there, but you can't buy it. I'm seeing that. And I'm sorry, Indiana agents, it seems like a lot in Indiana. All right. Like, I see one right now that's on the market for 1 point something. I won't say what it is, but my friend almost bought it in 2018 for $550,000, and they painted. All right. All they did was paint the house. I'm sorry, we've had some appreciation, a lot, but we haven't had 550,000 into the over $1 million, a couple $100,000 over $1 million category, right? So if you have an interested buyer, this is where agent quality comes in, and their commitment to you, and not just trying to turn and burn, is you have to be able to say, I know you love this house and you have the financial wherewithal to do it. Okay. But this thing is not worth anywhere near this amount. Okay. And it's actually one of the nice things, though, about being with a lender and being financed, though, is in both states, Illinois and Indiana, if the property doesn't appraise, you're not obligated to proceed. It's worded a little bit differently. In Indiana, it's explicitly stated in the contract. In Illinois, you kind of have to use the mortgage clause to get that, but you're going to have some double checks on you with a lender. All right. The next step, though, above that is if the guy really loves the property, you may need to do some appraisal waiver stuff. All right. As a matter of fact, that was one of the tricks that we just used to get our most recent clients accepted.
Yep.
And I understand that the buyer that we were competing against actually had excellent credit, excellent lender. We were only a couple dollars over. And I looked at this house, and it was literally one of the nicest houses I've ever sold, not even just in that price bracket. I mean, it was absolutely gorgeous. So I said, yeah, the highest comp is here, but this house is so far superior. I mean, go here and let's guarantee a little bit of it. Did we guarantee? I think we might have done a full.
No, I think it was a certain percentage.
Usually we'll do a certain percentage, or we'll say like $10,000 appraisal gap guarantee or $5,000. That means if there's a shortfall between the appraisal and the purchase price, we're going to guarantee a certain amount with extra cash. All right. That says, hey, we're willing to move a little bit on this thing, but we still want our protection. It's a win-win, and it made all the difference. I think we only beat the other guy out based off that.
And it's a very easy. It's so it's scary. Buyers a lot of times get nervous about it. I can have that conversation with you, and those folks that bought that house, I want to say I gave them their number, the initial conversation when you guys are putting the offer together, and their actual cash to close was like $242 different.
Yeah, as a matter of fact, like I give one of my, if we're in that situation, all right, where the property is clearly overpriced, all right, it does happen where the listing agent says, yeah, I know, but the seller wanted to try it. Woman, you got nothing that confirms it. What in the hell makes you think that this should happen? If we're in that situation, or if they're adamant that it's actually worth it, one of the things that you can do is say, okay, well, we've got well-qualified buyer, and we're going to throw together a little bit of appraisal gap guarantee here, right? You're telling me that the property's worth it? Okay. So that way we're kind of protected all around. We're going to secure the contract on the property. You're adamant that it's actually worth it. That's fine. We're going to find out. And we're even going to go a little extra step in case maybe you're not being fully honest with us. We're going to give you a little bit of appraisal gap guarantee on this thing because we do love it. All right. And we're going to see where this goes. But none of that happens without the right lender. I mean, I'm telling you, I don't know if I can name them. I don't care. But like there's some super big banks that issue pre-approvals that aren't worth a damn. I just had one with a place that rhymes with Bank of America. That I was saying, I was hesitant to accept it because we had such
the Bank of America,
such difficulty with them over the years that and the guy's adamant, no, we've changed our processes, and they did fund on time, but we had a last minute hiccup, and it was like at the last minute we got the approval, right? So like a guy like me, like I'm so beat up with that, but like if you're using a lender like Tony, who a lot of people in the area know, and like we're gonna see him again, right, is the issue. Well, that's what we look at as agents. Like I can't do crazy things on a property for you because I'm going to see that listing agent again. All right. I can't destroy my business to try something for you that I know isn't going to work and is going to jeopardize my credibility. Same thing with an agent that's local in the market, right? If we know that there's those lenders that have that rap for this guy's going to try anything.
Oh, yep.
Right. So that's it. There's nothing more important. We've been talking about this for 20 years. The importance of a pre-approval.
It's still important. Let's talk about roundabouts. Hey, let's talk about people here. How about this? We know the whole thief in the night thing too, right? People in Illinois get out.
Oh man. So you see last night, Illinois Democrats in the middle of the night, under the cover of darkness, passed the largest spending bill in Illinois state history, $53 billion. Pritzker is going to sign that today. And they said right in it, and your taxes are going to go up. And the funny thing is these people are saying, well, it was responsible and there's equity in it. And all of these things that are blatant lies that have no application to it. And get through all of that and just know that no business or entity has ever gotten itself out of bankruptcy by spending more.
And it's really crazy. Like if you look at it, right? Look at Illinois. Hey, the lottery is going to help fund the schools. Never happened. The tollway is eventually going to go away because it'll pay for the roads. Never happened. Insert casinos. We're going to issue more casino licenses so that we can continue to tax the poor and get and start this cycle. That hasn't worked. Let's put slot machines and everything and take a piece of that. Where is all the money going there?
Well, what's happening is it's locking people into place, which is really quite frightening, right? There's only so much room. We're just starting to see it happen in the southern suburbs where those tax bills are out now. Okay. And the prices there's pressure on them. Someone in Park Forest the other day, $16,000 tax bill on a regular house in Park Forest.
It's probably what, 180,000, if that.
Yeah, exactly. So what's going to happen is, if you're struggling and strapping to just pay your tax bill, you're never getting that extra money together to either pay down your mortgage or put aside the savings to move into a better area. All right. Because you can't, you're stuck.
Well, you get stuck there. So then you get stuck right with real estate taxes and your cost of living. Then you get hit with sales tax, right?
Yeah.
And then you get the summer gas in Cook County, Will County, the highly populated areas. So now all of a sudden the summer blend, your gas costs 30 cents more a gallon. It's just this cycle that continually puts a cap. It actually probably takes that cap and ratchets it down one level and another level on value.
Well, you know, it's just it's frustrating to see when I look at you know, your long term, all right, and your purchasing power as like a human being, your long term wealth. It has a major impact because we see people like once you get to retirement age and maybe you need to downsize, you in a smaller house. I see this quite a bit. You want a one level thing. Maybe you'd like to move to Florida or another part of the country where you have family. Well, the gap between the two has grown so far that you can't take advantage of it. And I see people contemplating the move, and I'm not arguing the move to Indiana. I mean, I have contacts in 50 states. I move a lot of people to Tennessee, Kentucky, Florida, Arizona, Georgia, superior tax scenario states. And those places, the real estate is becoming worth more and more. And while the rate of appreciation in Illinois is kind of stagnant. So I talk a lot about that gap, and it's really just because I've seen so many people at the end stage, and it's like, well, if you take a look at the tax difference that we paid over the course of the last 35 years, and we were to take that difference and give it to the borrower or the person instead of the government, would have made a huge difference 30 years later.
No doubt about that. Two things sure in life: death and taxes.
But yeah, exactly. And buying is still better than renting. Looking at some of our first time home buyers, I have a unit, and I'm looking at investment real estate all the time. I just last week met with a investor client of ours who has about a $5 million portfolio composed of properties that are largely worth between like 200 and 350,000. So it's a fair amount of properties. And when we're talking about what he's getting for rent, it is outrageous. I mean, he's getting $2,400 a month on a 2-bedroom, 2-bath,
right,
fairly locally.
And let's talk about the rent scenario really quick, right? So if I want to go rent a house, I know you don't necessarily deal with renters, but you have plenty of clients that are landlords, right? And then own properties. They're expecting first month, last month, maybe even a security deposit. So at $2,400, right, you're at $5,000, maybe $6,000 or $7,000 to tie up that property.
Yeah,
that's the down payment on some of these houses at these price points too. So it is expensive to rent, and then you're still subjected to that rent going up, pressing up, right? Because that investor's cost of capital has gone up. Right. They've also noticed appreciation, and they can keep asking for it because there are a lot of renters in the market.
Exactly. And I think, you know, one of the big concerns there that people have too, though, why they rent is mobility. All right. People they're not sure that they want to commit to this area or that they want to be here in 7 years. And for the most part, I've seen so many people who like, look, you'd be better off to like make the gamble, just like say, okay, if I have to sell in a few years, then I'm either going to dig in my pocket to pay some fees to transact. But in the meanwhile, I'm locking in a payment that I can afford, and I may get some appreciation out of it, because it seems to me like 9 times out of 10, the person ends up staying here. I can think of one example in particular. It's a person very close to me that's been in the same spot for like 7 years, 8 years. And if they'd have purchased, they'd have made a boatload on it. And instead, rent just went up, 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 up. And I think you see people not agents don't argue this as much as they did before the recession, which is now going back like 15 years. Everybody in the early 2000s used to be like rent, or used to be buy, don't rent, buy, don't rent. Prices only go up. Well, they didn't. It took a 30% haircut. All right. But they took a 30% haircut once since we've been recording real estate.
Yes, it's like
values.
1926.
Right, exactly. So, the gamble is that they should go up. If you're on the fence and if you have a down payment, if you have 10% down, buy something for sure. 5%, we think about it. All right, 3.5%, you're still probably better off, but maybe renting, maybe. All right. But get into a property and we've got to get you pre-approved.
That's the thing. We, speaking of down payment and stuff really quick. So Novus, part of Federal Home Loan Bank, we still have allocation of down payment plus funds. Great news too. That's based on area median income. Some of that data got published last week. So you may now qualify for an extra $5,000 grant from us. Give us a call. Let's ask the questions. I think it's the biggest thing, right?
What are some of the average median income figures? So what he's saying is for some of these programs, you have to have an income level at or less than a certain amount of the local median income. So, and this figure is published by,
I think the Census Bureau's got it. We can post a link for it. Usually if you just go to if you type in Fannie Mae AMI lookup, okay. HUD's got it too. So you can type in HUD AMI. So AMI, area median income. So HUD AMI, Fannie Mae AMI, all of those. And so what matters to lenders for these programs, okay, there's going to be three figures. There's going to be 100%, 80%, and 50%.
Okay.
The majority of loan programs for down payment assistance is going to be based at 80% or lower. Now, Fannie Mae and Freddie Mac have a special one, $2,500 for no strings attached if you're at below 50%, but you're going to really struggle to qualify for a house around here with that. But the 80% figure is a target. I want to say Lake County, Indiana, like St. John, Dyer, around there.
Is it county or town?
It's it's actually like this little census tract. So it's really, really narrow, but the numbers are pretty consistent across the county.
Okay.
So St. John specifically, I want to say is 104,000 is 100% area median income. So someone making $80,000 can qualify for a down payment assistance program.
Wow. Okay.
So these numbers have crept up and up and up, and they're a trailing number because it takes a year to compile all the data. But they did just repost those, so that will open up some opportunity for that. But just have the conversation. There's other ways you can come up with down payment, right? Gift from family member. If you want to take some money out of your 401k, your employer might close the loan for a customer the other day.
You know what? Actually, common question. Explain to the people. And I think there's a couple different ways that this works. 401k. Can someone take money from their 401k to use as a down payment on their house?
Primary residence, 98% of the time, yes. So every 401k has, they follow the standard IRS guidelines for 401k distributions, but a company can overlay it. And you'll get that in your plan summary. So go to your 401k website, all right? Find the plan summary and type in hardship withdrawal. Control F, hardship withdrawal. And it'll tell you if you're able to take a hardship withdrawal, which is if you're before 59 and a half, right? You're under 59 and a half years old, you can pay a 10% penalty and draw funds out, not a loan, just actually take the funds out for a down payment for a primary residence.
Okay. So it's kind of like paying the taxes on it right then. 10%.
Correct. So you pay the penalty right there. And they actually net that out of your, but it all gets netted out. So you take whatever, 10 grand, they're going to take 1,000 off the top.
With the depending upon what you're invested in, with the volatility of the stock market, I mean, 10% on a penalty,
honestly, we're hitting the top of the S&P, we're hitting the top of the Dow right now, and I don't think it's a horrible thing. Other alternatives, if your 401k plan, right, you're a little bit nervous about taking the money out, and I get it, it's not for everybody. A lot of plans allow for up to a $50,000 general purpose loan, and that's where a lot of people get confused. We do not have to count that loan payment against your 401k in your debt to income ratio because you're borrowing against your own assets.
That's awesome.
And then you're paying yourself back. You're paying yourself interest back.
Okay.
So you're borrowed the money, buying an asset that you anticipate to be stable, if not appreciating, and you're paying yourself the interest back.
So, that's awesome. I think what we ought to do is probably on one of these, I think we could spend an entire session on down payment, where you can get down payment from, where you can get down payment assistance, what it looks like.
Where you shouldn't get it from, too.
Well, yeah.
Well, I mean, where you think that you might be able to get it, but it actually disqualifies your mortgage.
Yeah, but like a gift, how does that work? What are we going to be looking at? Down payment assistance program.
That'd actually be really great to go over, Tony, because HUD, FHA, right, the governing body for FHA, just changed and loosened up some archaic guidelines on gifts.
Awesome.
So let's, I think you're back on in another 2 weeks or so.
Yeah.
Let's do it. We'll call it the gift episode. You do have to wear a Santa Claus hat, though.
Well, down payment, really, just in general, because I think one of the biggest hurdles that I see, or that I hear people talking to, a lot of times it's parents who are referring me their kid, but even the parents and the family members too. Like, how am I going to get the down payment? Like we know that the mortgages, the rates are a little high, or rates are what they are. The payments are high if we're putting less down. How can we put more down? Where can we get money from to do these sort of things? Okay. So I think we delve into a bunch of that stuff, like down payments.
Perfect.
Where do you get how do you secure that huge down payment? Right. I think we should do that.
Let's do it. We'll talk about that, because then we'll briefly touch on closing costs, because that's the big thing. We'll close on this part unless you got anything else you want to talk about.
No.
But when you talk to these online lenders that rhyme with Bank of America, Go Fly Your Ship Place, those call center, I hate to use the term, because there's really good mortgage. Some of my competition is really, really good. A lot of my competition sucks. They don't have that conversation about what closing costs are in the marketplace.
Right.
So, when you just say, hey, Tony, I want to put $10,000 down, I have the conversation back to you and say, well, Tony, when you're saying $10,000 down, do you mean $10,000 of down payment, or do you mean you want to bring $10,000 into the transaction? Well, what is that? Like, what do you mean? Well, if you want to buy,
they mean 10,000 into the transaction.
Yeah, 98% of the time, that's what you mean. But the problem is, you have these people that manipulate, and they're just going to string you along. Oh, 10,000. Okay, so you're buying 300, so you're going to get a $290,000 loan. Well, why do I need to bring 18,000 to closing? Well, it's because you need closing costs, and title insurance, and especially on the other side of the border, cost a decent amount. So we'll go through that with the down payment stuff, so that you know what you're going to need, how much you're going to need, where you can get it from, and the right questions to ask.
Where you can get it from. Awesome. All right.
That's it. Adam, enjoy Will Guidara. So he's actually seeing one of my favorite authors speak today here at the State Farm board meeting. So he's all excited about that one. We'll catch you guys next week, and we'll catch you in 2 weeks, right? 3 weeks, 2 weeks.
Talking about where you can get the money.
And Tony will be dressing up like Santa Claus.
And your